Welcome back to the channel. We're just cracking up a few cold ones, talking AMC stock. Everyone's freaking out about institutional selling on AMC, but I'm saying there's no need to fear, and I need to explain exactly what's going on there. I also want to talk a little bit about some rules that are going on and changes regarding a possible short squeeze on the stock. Now, I want to clear some things up and explain why these rules, in my opinion, don't really matter in the short term, but we'll explain that a little bit more in depth in the video. It's going to be a pretty short video, so stay along with me for the ride. And this video is actually going to be, I'm just joking, but call me Diet Coke. I'm here all day. Like, subscribe, do what you gotta do. Let's get to it.
Good evening.
All right, traders, it's great to have you. We're gonna break down what's going on with the SEC just a little bit. Now, there's a lot of questions about the anticipation of new rules being set in place because of short selling that's going on here in America. Now, it's going to take some time for these laws to go through. That's the main thing I want people to understand. When a president comes into office, it typically takes a while for his new laws to get passed. And so you can imagine the SEC takes even a longer process because they don't have the executive power. I mean, come on. Not everyone can be Donnie T. Okay, so I pretty much found the same 3 articles, but they're explained at different levels. This is the article I would recommend most retail investors really look into. It's from quartz.com QZ. It does a really good job explaining why SEC Chair Gensler really is focusing on this emphasis. Now, when you look at this chart right here, this is what got me more excited and realizing, wow, Citadel has a lot of power. As you look at this chart, it shows the stock trading market share by venue. At the top 3, you have the obvious 3 major candidates: the New York Stock Exchange, the Nasdaq, the CBOE, and then number 4 was really surprising to me. I don't really know who I thought it was going to be, but I thought their market share would be a lot less than the CBOE. But it's Citadel at 13.4%. Then there's also Virtu, which no one really talks about in comparison to Citadel, even though Virtu is still right up there with them. Now, the fact that they have that much power and that much market share in the market is incredible. The fact that they're even competing or within a few basis points of the New York Stock Exchange is absolutely incredible. But as they break this down even further, it shows you the real concern and what's really going on. Now, I'm not saying that it's not important for the squeeze, but what I'm saying is that this won't happen soon enough, in my opinion, to affect the squeeze. And if this does end up having a big part in the squeeze, it's going to take a very long time to be implemented. You have to know that laws do not happen overnight, over a month, or over 3 months. It takes a long period of time. In this article, they do a very good job at explaining and emphasizing the most important parts of what he was talking about in his speech. We have seen an increasing concentration of market making and also separately in brokerage, particularly around retail order flow. The order flow is where things get a little dark, and this is where they have their main problem. So these are the 4 major trends that they're concerned with, or 5. You have your gamification of trading, which centers mainly about Robinhood, but I don't think that's going to be a problem since they're going to be IPOing and they pretty much are compliant with everything they're doing. The payment of for order flow, this is a pretty big issue, and it's a pretty frowned upon situation when you go to other countries specifically. So the fact that we're allowing it here in the United States should be red flag number 1. The short selling, this is where he really started to break down on it because it comes right back to the retail trader. The SEC chair said that a regulator will examine transparency in short selling, as well as the derivatives that were used by Archaeos Capital Management. Everyone knows the Chinese guy that got all of his money taken away because he got margin called on Discovery and Viacom. Yeah, that really smart dude. And then the last one, clearing and settlement. This was the big issue with GameStop and could potentially be the big issue with AMC. We're seeing a lot of FTDs and stuff like that, especially with the synthetic shares. That's been the really growing talk around the stock. So this is what everyone's kind of focusing on, that and the short selling. And the short selling is mainly transparency, creating more laws so you have to see exactly what's going on, explaining the derivatives in depth so the actual retail trader like you and me can understand it, even though I like to understand most things. However, we'll just say that I'm a smooth-brained ape for the time being. And then we'll go over to routers. And if you're ever familiar with looking at financial websites and getting good, accurate information, routers is probably one of the most trusted sources. Now, on this is where they specifically go about how long it's going to take, and it's not going to be an instantaneous thing. It also goes into how he's explaining why it's so key to make it more transparent for the retail trader, especially if you're making it so easy for them to invest on apps like Robinhood and Webull now. But he's really focusing more on Robinhood with his rhetoric. And then as you can see here, we need to ensure investors using these apps with these types of futures continue to be appropriately protected. That's really the big emphasis. And that's the question of, well, how much do they need to know? And then that's where the lines kind of get gray. So see right here, Gensler did not elaborate on the timing for any potential regulatory proposals. And this is where, again, the lines get gray. And I'm trying to explain to people, you may see the SEC investigating. It's going to take a long time. So if you are relying on that to be a catalyst for your squeeze, you might be here a long time and you might see a big dump before then, because we have a stock split that's being rumored, and then we have more dilution, particularly that's being rumored. One of them most likely will happen. The question is how soon. Education time is done. We can shut our brains off. Just listen to your boy. Come on, sit down with me. Sit on down. What we're talking about now is going to be, in particular, Wanda selling their shares. If you've been on the live stream, I've kind of ranted and raved on this subject, and you've heard me scream at my computer. Now, in my opinion, Wanda selling wasn't the worst situation ever. The one thing we have to look at is, one, Wanda is kind of liquidating a lot of US shares of companies. That's one thing that they aren't focusing on. Now, AMC is a global subsidiary and operates more than just here in America, but they're based here in America. You have to take that into account. Two, they've been trying to get out of AMC for some time. Only one thing I can say is, Adam Aaron, why did you not give us a heads up during the earnings call? You probably knew. Granted, may have that been a conflict of interest? I don't know. He's answering DMs on Twitter now, but yeah, whatever. So yes, that part is kind of bad. But the fact that Wanda sold 30 million shares and we only dropped 3%, can you understand how that's pretty big? You sold like a 9% of the market share and we only dropped 3%. That's nothing. That's actually relatively really good news. So that part I'm pretty happy about. I like that. I wasn't too concerned. I keep trying to relay that to everyone that it's not the end of the world that Wanda got out. And it's looking like retail traders just keep buying it up. Between retail, BlackRock, and Vanguard, I mean, someone's buying it up. That's really looking good. However, in the short term, there's more shares on the table. This is getting pretty interesting. So we'll have to see exactly how this plays out. And then you have Citadel adding some shares, shorting more shares, grabbing puts, grabbing calls. They don't even know what they're doing over there. Citadel's just like, guys, think of a strategy. Something's got to work eventually. All right, so I'm not going to spend too much time on the chart today. I will have a little bit more of an in-depth review going tomorrow about exactly what I'm looking at for entries and stuff like that. Now, with what we're seeing here, I'm not concerned. Like, I'm saying this pretty clearly. Try to be as serious as possible. Yeah, pretty serious, I know. So as we get into this, you can see we're holding this local SR support here. Those levels have been maintained and have not lost any integrity. That's something we do really like to see. The fact that we keep maintaining those levels has me feeling really good. Now, if we start breaking below those, that's the reason and time to be concerned. Yes, threat level Mendite. You heard it here first. However, as of right now, it's not something I'm super concerned with. I'm just kind of seeing what's happening, buying shares as we dip down, watching the IV to start getting crushed, because I tell you right now, the IV is absolutely getting destroyed. Take a look at this. Okay, so this information is 100% free to get. You just go to Google, type in AMC, implied volatility, hit the Market Chameleon link. It's typically at the top of the search history. You just make an account for free and you get this information. And then when you click from here is the IV30 MA, and then it shows the moving average for the last 20 days. As you can see, the blue line represents the implied volatility spiking from that last move. Yes, we had a pretty major spike, but look at how fast it is dipping in comparison, moving right back below that moving average. Now, the last few times we've had some really major pushes up, and if you're looking at the scale of things, the implied volatility is still roughly at a lowest level that's been in months, since really January. The push we got this May was nothing compared to what we had before, and we still made massive amounts of money. So any stagnation that we're seeing is very good for the stock. So yes, the options king will be making more moves very soon, so stick around. But as of right now, it's just shares for me personally. People are saying, Tyler, I don't want to miss out, this, that. If you're selling shares and not selling your options, I don't know what you're thinking. That's like keeping the riskiest asset in your portfolio and then selling the thing that probably will end up making you money. You sell the risky one most likely first, and then you hold the shares and sell those last. That just makes logical sense. That's not financial advice. That's just, you know, me not thinking like a potato. Anyways, I will be getting to more options here soon, but as of right now, I am supporting the cause. I am buying shares because I do think they'll be valuable and I like the stock. That's going to wrap the video up for today, guys. Like, subscribe, do what you got to do. Unsubscribe if you need to. We'll be back tomorrow. Have a good one. Namaste and namaste.
Hey, no pressure. Never graduated, but I school them like professor. Growing up.